It was February 10th of this year, and the DeFi protocols were heating up. I had already gained exposure to Aave and began researching lower cap projects to invest in for greater exponential gains. Cointelegraph introduced me to a new project launched on the Polkadot ecosystem called Reef Finance. Reef focuses on providing cross-chain trading with the addition of centralized exchange liquidity. Once my interest was piqued, I did what every savvy investor does and performed my own research. Going directly to Reef Finance, I analyzed their roadmap, and based on their indications, Reef had successfully hit all of their short-term goals. Next, I scoured the Reef subreddit to see what the community was saying. A lot of positive sentiment was shared, and tremendous future growth projections were posited. At this moment, I felt the excitement building inside of me. To cover my bases, I watched the analysis of Coin Bureau, a YouTube influencer who I feel is rather trustworthy. In his review, he detailed that Reef is going to serve as a DeFi ecosystem that allows new investors into the DeFi crypto space. Reef's easy-to-use platform will provide entry and exit positions from one easy-to-use interface. Additionally, the platform integrated with AI with the goal of making crypto asset management easier for the beginner. Now I am feeling quite good about the project. One more step to go with my due diligence as I check CoinMarketCap to assess Reef's tokenomics. On February 10th, the tokenomics of the coin looked promising. Prior to investing in the project, I pulled up the latest TradingView chart. Aside from the expected dump at the project's inception, Reef had experienced a steady climb in valuation, gaining nearly 467% in 1 month. Feeling confident that this price would continue to climb and understanding that Reef not only has the support of Polkadot but Binance as well, I decided to invest in the project on February 10th. Entering a small position at less than 3 cents per token, my expectations for this investment were accelerating, and my brain provided me with a feeling of euphoria. This feeling of happiness reinforced the research I performed and strengthened my approach to investing in new projects. Unfortunately, however, as quickly as that feeling of euphoria was introduced, disappointment flooded my nervous system as the price of Reef instantly began to nosedive. Unbeknownst to me at the time, the Reef development team decided to alter either the circulating supply of the token or the maximum supply. Regardless, this opaque decision and lack of transparency angered the Reef community, and a brisk sell-off began. Couple the angry dumping of the Reef tokens with the overall decline in the cryptocurrency space, and Reef's price had dropped nearly 53% in just 18 days. In such a short period of time, my brain chemistry swung wildly from one side of pleasure to the other side of pain as I shifted from expectation to disappointment. This resulting pain further created doubt in my research capabilities. Doubt equals the demise of strategic financial planning and can lead to an investor getting wrecked across all open positions. This balance between expectations and disappointment is the topic of today's crypto psychology video. As we all know, cryptocurrency trading is a balance between expectation and disappointment. The challenge is to not allow an imbalance to occur. An imbalance too far in either direction results in trading mistakes, and mistakes can cost the trader money. What is not as well known is that the human brain is always on and always working. Anticipation, or what I refer to as expectation, is rooted in the portion of the brain known as the cerebellum. The cerebellum is responsible for all autonomic, also known as automatic behavior. With this expectation always in play, the human brain desires more dopamine. If you recall from my previous video, dopamine is a neurotransmitter, and neurotransmitters relay messages from one neuron to another. Dopamine is released in the brain's frontal lobe and acts as a stimulant that prevents pain, stimulates arousal, and causes excitement. Dopamine stimulation happens when we experience and expect good things. Additionally, greater dopamine is released when we have an expectation of something and that expectation is achieved. Anticipating positive events sustains the output of dopamine into the brain's chemical pathways. Therefore, when expectation and realization are met, we have a constant flood of dopamine into the brain. This dopamine feedback loop was originally believed to be part of the pleasure systems of the brain. The dopamine that is released makes you feel enjoyment and pleasure, thereby motivating you to seek out certain behaviors, such as food, sex, and drugs, which release a tremendous amount of dopamine. But then research began to show that dopamine is also critical in causing seeking behavior. Dopamine causes you to want, causes you to desire, causes you to seek out and search. It increases your general level of arousal and your goal-directed behavior. Dopamine also makes you curious about ideas and fuels your searching for information. We all know that searching for the next great project in crypto is part of the game. What may not be known is that dopamine fuels that search. And if that crypto that you research eventually hits or grows exponentially 100x, 150x, 200x, that level of dopamine is strengthened, and therefore this dopamine feedback loop of search and expectation becoming realization is greater. Unfortunately, this feedback loop also could lead to dopamine addiction. The dopamine system is especially sensitive to cues that a reward is coming. If there is a small specific cue that signifies that something is going to happen, that sets off our dopamine system. It's not the reward itself that keeps the dopamine loop going. It's the anticipation of the reward. So to put it in cryptocurrency terms, the alerts that are set up on TradingView with price expectations in the future, once those alerts are queued and we hear the bell or the notification comes across your computer, that's actual indication that that cue leads to an addition of dopamine release in the brain. So therefore, the hunt releases dopamine. And then if the expectation is acquired and the expectation is met, that also releases an additional amount of dopamine that could lead to someone constantly searching, setting up expectations, and hopefully achieving the long-term goals they set up. However, there is caution with this dopamine feedback loop. The conditioned release of dopamine can cloud an investor's decision-making process. Therefore, you need to proceed with caution. And so you embrace the initial release of dopamine, understanding that your brain may be established in a routine and the feel-good euphoria may not be warranted. Additionally, you want to stick to your trading strategy without taking any shortcuts. Also, do not over-leverage your initial position and investment size. And lastly, stay balanced within this feedback loop. If you do not remain balanced, ultimately or possibly, expectation is the root of all heartache. And this could be debilitating for your cryptocurrency portfolio. Inside every cynical person, there is a disappointed idealist. And disappointment is on the other end of expectation. It is the opposite of expectation. It is the yin and the yang, the sun and the moon. In a 2002 study in the Journal of Cognition and Emotion, disappointment encompassed two distinct emotional reactions. There's person-related disappointment, in which the letdown comes from someone revealing an undesirable part of themselves. and outcome-related disappointment, in which circumstances don't align in the way you'd hoped. The latter is typically what occurs in the cryptocurrency space. Regardless, both types of disappointment have one important thing in common. They're painful. It's down to the brain chemistry. Dopamine, again, the neurotransmitter associated with reward, can rise from anticipation alone. As we know, that anticipation is your expectation that your research will merit tremendous gains. But if whatever you're anticipating fails to come to fruition, those dopamine levels come crashing back down. And this is where anxiety, depression, and doubt come into play. As you can see, expectations lead to perceived performance. And if that perceived performance is achieved, you have satisfaction. This is the initial dopamine feedback loop. However, if the perceived performance does not merit the results you want, we end up with a disconfirmation of beliefs. In short, you begin to question your belief system. And in cryptocurrency, having doubt is one of the leading causes of failure or getting wrecked within your trading portfolio. So disappointment can lead to doubt, and doubt can derail your trading strategy. So one of the best ways to maintain and stay on track is to remain convicted to your trading strategy. Do not deviate from your plan. Also, accept that disappointments will occur. Understand that dopamine is influencing your response to a trade that did not move in your expected direction. When disappointed, a person is more likely to sell at a loss. Maintain diamond hands and hodl until a better sell opportunity presents itself. Remember, disappointment is a learning experience which provides a lesson, and growth can only occur by overcoming challenges. Therefore, in the end, you need to become comfortable being uncomfortable. Also, you need to understand that a lot of the decision-making process that takes place within this wild west of cryptocurrency comes down to your brain chemistry. You need to have control over the balance or imbalance of the chemistry within your mind. At the end of the day, we all do not start off life as a full-grown elephant. It takes time to mature. It takes time to grow. We learn from our mistakes. And we also need to understand that to achieve greatness, you need to overcome challenges, embrace those challenges, and learn from any mistakes that may have taken place.